Okay, today we're going to talk about why you're renting. I talk with a lot of folks that are renting, and they often cite some pretty common reasons why they're not going to buy a house, even though they know that they would like to. A lot of times they know that they should. And today we are going to explore those reasons and talk about them a bit. So, the common problems that I hear from folks that are renting and why they're not buying houses a lot of times they can be broken up into five main groups. There's credit, they're worried about their credit. There's the down payment. There's PMI reluctance, which is folks that don't want to pay PMI. There's what I call condo aversion, people that are really, really focused on getting a house and not a condo. And then there's H-1B status. So that doesn't apply to a ton of folks, but I actually talk to a lot of folks that think because they're H-1B that means that they can't buy a house or get a mortgage, and that is not true, and we will talk about that a bit. So for credit issues, credit definitely impacts your ability to buy a home, just like it impacts your ability to buy everything else. So, but the main thing here is if you have credit issues, you should start to work on fixing them. And I know that sounds hard, and fixing credit is designed by the financial institutions to be difficult, but you don't have to do it alone. Most mortgage brokers are happy to help you fix credit. I've seen some pretty amazing things. I've seen people move their credit scores up 50 to 250 points in just 3 months. So it really depends on what's wrong, how long ago it was, and various other things. So talking with someone about how to fix that, a lot of times some of the mortgage brokers I work with, they'll help you fix your credit for free to help you get into that next house. And it's huge. It's a lot easier if they have 6 months to fix it. And not everyone can be fixed in 6 months. I don't want to suggest that, but lots of folks can. And then there's a third option, which I think a lot of people don't understand, which is that if you develop a relationship with a local bank, okay, not a Bank of America, not a Citibank, you're always going to be a number to those guys. But there are a lot of local banks, a lot of credit unions here, and there are other private banks that do a lot of portfolio lending. And lending is lending that they do inside. And if you establish a relationship at that bank and they see that you are credit worthy, even though your score isn't great, you can petition the bank to give you a mortgage. And there are situations where you will get it. It's not hard to do. It doesn't take very long, and this is all about accelerating the process so that you can go from not buying a house to buying a house. That's really what we're trying to do. For the down payment, a lot of people talk to me, well, I don't have a down payment. Well, right now, most people cannot get 100% financing. But it's probably not going to be too long before some local banks are going to be offering programs where you can get 100% financing. If you're lucky enough to be a veteran, thank you for your service, VA loans are almost always 100% financing as well. And so those are terrific options. So those are situations where you do not need any down payment at all. And there are plenty of other programs, specifically FHA, that start with as little as 3.5% down. And there are lots of other programs that you can start with just 5% down. 5% might sound like a lot, but and 3.5% might sound like a lot. But if you're, just targeting a way to get out of the rental cycle and start owning your own place, it's not so much. And there's ways to do it. And, I've helped people do it before. I can probably help you too. So, but whenever you do get these high LTV loans, these are high loan to value loans because the value of the house is almost as much as the mortgage. Those loans often require something called PMI, primary mortgage insurance. And some people know about that. They don't want to pay that either. And so for those of you that are out there that have some down payment and good credit, but you're looking to wait until you save up 20% to avoid PMI, if you're in a rental market like this one, a really expensive rental market, PMI can pay for itself in 1 year. If your rent's going up $100 a month, PMI for most people is about $100 a month. A lot of times it's $75 a month. So if you're in that house, the first time, rents go up $100 a month, your PMI is just netted out. And the difference is you're in a house. And the next time it goes up $100, you're not saving $100. So PMI looks expensive on paper. Nobody likes to pay it. I'm not going to say anyone likes paying PMI because I know nobody does. But relative to getting your rent hiked every year, it can definitely be a good option. Plus, a lot of obviously you get all the other benefits of home ownership, which is that you're paying yourself equity and you get locked into appreciation. You don't get either of those things when you're just renting. The other thing, and a lot of folks don't know this, is if you really just don't want to pay PMI, you can buy it out when you purchase the property. So you can say, listen, I'm going to make one big PMI payment, roll it into the mortgage loan, and then you'll never pay another PMI payment again. So not a lot of folks do this. There's not a lot of loan programs where you can do this, but it is an option. I actually think it's the cheapest way to pay PMI. In most cases, it's far cheaper to pay it out all at once than to pay it every month. But, these are both really good ways to sort of get past that. So if you have 10% down and you're looking at saving up money for another 2 or 3 years, you should really not do that. You should look at these options because this is the way to go. Condo aversion. I talk with so many folks that they know they can afford condos, but they don't want to buy them. And I say to them often, but you're in an apartment building. I mean, a condo and an apartment building, it's basically the same thing. The difference is you don't own it. And, but you're not where you want to be. If you've got condos, I understand you don't want to pay the fee, but about 80% of those fees goes to time-saving activities or other things that you would pay for anyway. If you own a house, you have to buy a snowblower. If you own a house, you have to buy, a lawnmower. These are things you have to buy that condo associations, most of them anyway, do for you. And on top of that, they're protecting you for, a lot of them are protecting you for capital items like roofs and windows and decks. You don't have to pay for any of those things. You contribute to a fund, which is called the Capital Reserve Fund. And when those things need to be replaced, the association does it for you. It's not money lost. I know a lot of times that condo fees feels like money going out the door, but it's not. And a lot of times being in a house just means that you're paying a condo fee on an irregular basis. But most importantly, if you're in a condo, your rent gets capped. Okay, you've got a fixed mortgage. You're going to pay the same every month, every year, and that's going to start to allow you to build equity. And you're going to be able to. The condo will generally appreciate over time, and because of those two things, you're going to be able to save up money, and you're going to be able to increase your equity, and you're going to be able to get into a house that much sooner. It's very difficult to get off the rental treadmill, especially in an expensive market like this. A condo is a good way to do that. I know it's not a perfect solution, but it's better than renting. I mean, renting prices are crazy, and I think most people should not think about a condo as the be-all, end-all. I think most of the people who don't want to be in a condo, a lot of times it's based on the fact that the next house that they're going to buy is going to be the last house that they ever buy. And that's just not usually how it works. Most people live in a place 5 to 7 years and then they move. So if you can do 5 years in a condo, you're going to be in a lot better place and you're going to be able to buy a much bigger house than you were going to if you're just renting that whole time. And the other thing that I like to point out is that there's a huge variety of condos. They're not all the same. And there are more and more complexes today that are almost like single family homes. Basically, they have either little HOAs or condo-like fee HOAs, but they're really, they don't share any walls, and they can be a good solution too. They just tend to be smaller, but there's a lot of good ones out there, and they make sense as single-family alternatives. And the last thing I'm going to mention in this slide is that I have had quite a few prospective buyers tell me that they can't purchase a home as they only have H-1B status. And that's not true. I've done many of these loans where folks were H-1B. It is harder. There's not as many loans out there, but if you're hooked up with the right loan officers, they can find available credit, and then you can solve this problem. So don't let your H-1B status be an issue. So that's my little video for today. This was a brief overview. I went over these things very quickly. If there's an element on here that you'd like to talk about more, don't hesitate to reach out to me, and we will talk more about it. So lots of solutions available. Don't rent just because you think you have to. Thanks.